Hello, trading has closed on January 20th, 2016. Let's change our usual order around and look at the MEJT calls first. When the market was circling the drain here, MEJT said ultimately higher prices would print, which turned out to be an understatement. It now says the rally is a false move and gives us a target of 1828.12, most likely to print tomorrow. For the reasons I'll discuss, I think it'll fail and won't print. I had a few calls yesterday. One call was that I thought you would have a gap outside of the day's range. That worked. I said it wasn't required, but it wouldn't surprise me if we close little change. Well, we certainly didn't close little change. We closed down 22. However, tomorrow's open is often a surrogate for today's close, and if we gap up 22 points tomorrow, which isn't required, I'm going to give myself partial credit. And the case to be made for that is that here's your stilt, here's your stilt, here's your diamond, half will do, here's the height. Fibonacci target is right at yesterday's close. Let's not forget, if we gap up, that this pattern can also be called a cup with a handle, and the handle isn't down too much. If we gap up here, that completes a bottoming formation. I had a target from way back in April 2014. 1847. It printed and there was support right under it. It's really amazing how the market remembers these prices even years later. This price will appear on the software if you download two years worth of data. That takes up a lot of memory. It slows up the machine. So we just give subscribers a list. I think it's just easier to do it manually. Anyway, we gapped down, hit a series of lower lows. Not only couldn't we hold on to the lows, we couldn't hold on to this high. We closed over it. We also closed over this low, which gives us another Trader Vic 2B buy signal. The last one didn't work, but some of them work. Most of them work. Here's your 130-minute chart. Here's bar 13 finishing early of a combo buy signal. Here's your chart, the daily chart. Here's your Fibonacci target. You take this, you set it to 38.2%. There's the low. We had again the largest true range day. We also had the biggest volume. All these are compatible with a low. If you look at my newspaper indicator, the very top story on the front page of the Tribunes about the market, that's typical of a low. If you look at the new highs versus new lows, you'll see that we got to under minus 1400. That's a very extreme reading, which happens only once in a great while, typically at major lows. There is some proprietary stuff of somebody else which says this is a major low. It allows for one more lower low, which doesn't have to be lower by a large amount, but I really don't think that's going to happen. I think there's an increased risk of failure of the 1828.12 target, and I think even if I'm wrong in terms of price, I don't think I'm wrong in terms of time by very much. I think this is a major reversal we have here. We need some confirmation, but I still want to see us hit this line here in the 1950s. That's today's call.